Hello and welcome to our live market discussion. Today we are featuring our valued Senior Manager of Sales, Yuval Greenblatt. How are you,
Good
Yuval?
morning, or good afternoon, I should say, right?
And our valued member of our team, Gabriel Carrillo.
Thank you, Iman. Hi.
Hi, Gabrielle. Always good to do this
Thanks
with
for
you.
coming on here, Yuval.
Thank you.
So Yuval, let's get right into it.
Yes.
The elections are over and we're in this new era, new president-elect. So tell me, what's your impressions of how the impact of the election has had on the real estate market, and moving forward, where do you see it impacting the market?
Right. Well, I'm going to look at it historically, and I'm going to reference Jonathan Miller's data that he's been so kind to share with us over many years. Historically, what happens pre-election, things slow down. Probably related to a level of uncertainty that people have. Without, just maybe not focusing on their daily lives, focusing more on the politics and the news cycle. And then immediately after the election, once it's definitive, the new person is elected, things kind of go back to normal. And there's no real great relevance immediately as to who was the candidate, right? So things should go back. I think,
like which party wins or whatever.
Yeah, or who
was elected.
Yeah.
That's not as important.
Right, and that's historical reference. That's what we've always seen, and I think it did track that to a certain extent. But it was some nuance this time around.
Right, but Jonathan Miller's metric about how like 10 out of the last 11 presidential elections there was a bump in activity after the election.
Correct.
Kind of seems like, but this year was a little atypical because you're saying leading up to the election, like October was a good month.
Yeah, that was something that was very interesting in the market, and it wasn't completely interest rates are very directly related to activity in our market. We saw when the interest rates eased over the summer, we saw a bump in business. Then interest rates started to tick back up. I think today the 10-year was about mid fours, like 4.5.
Right, the 10-year Treasury.
Correct.
Right.
So rates have come back up, but what we saw in October, before rates really did much of anything, they actually were slightly on the incline. What we did see was that October, looking at it historically, and I'm referencing almost a decade of Octobers, it was up just over 10%. So just roughly every October for the last 10 years or so trades about 900 units. This October was right close to 1,000 units.
Oh, wow.
So that is a very major shift in the way that the market behaved. And that is pre-election, which is kind of interesting, right? You would kind of anticipate that will happen post-election if you look at it and you reference the previous historical data. But it seems like it got a little bit of a head start and, started moving in the right direction. I did look at early November. It's also extraordinarily strong, but it's only about a week and a half of data, and that's up about 20% also in contracts over the prior year.
Yeah, so it seems like the Fed dropping rates in September, 50 basis points, and leading up to that with the rates coming down kind of before the rate was changed by the Federal Reserve kind of created some additional activity, which kind of created kind of like an atypical, strong pre-election market.
Right. Well, what happened? Like the rates and the 10-year sort of trended before the rates were actually reduced.
Right.
It was the anticipation of the potential 50 basis point cuts that drove the rates down. We got the first 50 basis point cut. Then there was a little bit of uncertainty about what would happen afterwards, and then we just received another 25 basis point cut. But what happened after the rates were cut? Mortgage rates went up, adjusting to, other variables, I imagine. But that whole interest rate play, you could say it still has not negatively impacted us, even though they bounced back up, because trades or transactions in October were significantly higher than last year and the 10-year historic average for the month of October. So the interest rates and election almost didn't really matter at all preceding the election. And now we're through it, so I'm looking for even more positive news to come out of the markets. And as I just said, November looks like it's boding very well.
So Yuval, we're already in mid-November. Where do you think the rest of the fall market is going to take us?
Right. I think that we still have some runway left. Generally it runs sometimes into early December. It is the shorter of the two seasons. The spring selling season, I think everyone knows. Yeah. And also inventory. If you look at the way supply works in the city, and it's very consistent. The end of August and the first couple of days of September is always the absolute bottom of inventory. And then as soon as things open up again, inventory starts to grow, and that's what drives the fall season. People come back on the market, people start to purchase properties, and properties go into contract. Then it begins to tail off once you get into probably the second week of December. The inventory really starts to shrink. And then the lowest inventory of every year, historically speaking, with a few anomalous years, is the end of December and the first couple of days of January. So those are the two, like 6 month. It's 6 months apart, and it's like the bottom, and then it ramps right back up and feeds into the spring market. So the fall, we still have some runway left on the fall market, and I think that we'll continue to see it. As I said, the first week of November was very strong over last year. So I think there's still some time left for those that are in the market. I think that the greater challenge will be that supply is pretty tight.
I was going to say that I feel like this year kind of is driving some of the market forces.
Yeah, because there are two forces. Supply was running a little tight because of the uncertainty, so people were kind of waiting for the election to get resolved. But at the same time, you had a lot of contracts signed. So net inventory is going to trend down, right?
Yeah.
You're not bringing on a lot, but you have a lot of activities. So, you only have a finite amount of inventory to work with.
Yeah, I mean, we're experiencing that, right?
Yeah, I've definitely noticed increased activity with buyers specifically. I feel like there's a lot of pent-up demand. So it's interesting, like, I think they've been waiting a long time, just ever since COVID, now dealing with the high interest rate environment. They're really just waiting for the right time to strike. And there was all of this projected positivity around interest rates coming down, and then they didn't really come down as much as we were expecting them to. So like I'm noticing even today I had a buyer make an offer, and she's been waiting for the right time to make an offer on this property, and I think she's really looking to make a deal before the end of the year. I think buyers have this mentality that things might get better next year, and they don't want to be in a ultra competitive situation, because we're already starting to see some bidding wars. So I think, buyers are trying to strike now, but unfortunately there's not a lot of inventory. So, so do you think that might help us stay active even into the winter months that are usually not so busy?
There's always a chance, right? Probability says no, because inventory will continue to diminish going into January. It's humans are creatures of habit, and that's just what we do unless there's some major issue like a financial crisis or the lockdowns. Those distort the trends where supply just fell off. We shut everything down, if you go back to 2020, in our prime spring season. So what happened? The spring season was pushed forward about a year and lasted about 18 months, and we had historic highs. The best, I wouldn't say the strongest market in terms of pricing, but the strongest market in terms of contract signs.
Contract signs, yeah. But I just feel like the lock-in effect that we've been discussing now for the last 2.5 years, because we've had these elevated mortgage rates. So buyers who currently own properties and have mortgages, and let's say they paid 2.5% or 3% for their mortgage rates when they bought. Now they're back in the market shopping for new properties, but they're seeing that they're going to have to be paying 6%, let's say 7%. So to trade out of the 2.5%, 3% mortgage into the 6 and 7 was kind of a hard value proposition for them to accept. But I feel like after 2.5 years, like if you've been thinking about moving for the last 2.5 years, sometimes you can't wait anymore. So maybe, it's kind of a situation where they might bite the bullet and go ahead and buy the property. And it almost feels like maybe some of the elevated mortgage rate pricing has kind of baked into the sale prices now, because I'm seeing value in the market. I'm seeing that, like for instance, Gabrielle is today embroiled in a multiple bid situation where the buyer has to make some moves to win the negotiation.
Yeah, basically we got him a great deal that was accepted by the sellers. And over the weekend, they came back to us and said, sorry, we got a higher offer that's all cash, and our buyer's offer was, contingent on financing. So we were able to work with the bank and get him to feel comfortable with removing his contingency, and we raised our offer, and we were able to stay. We were able to keep the deal. So, that's just happening now. It's unfolding now. So, yeah, I'm already seeing like competitive situations.
Right. think that's what, yeah.
Specifically on properties that are priced well, like Iman said, like they already have this. Sellers understand that there's an affordability issue with the interest rates being so high, so their prices are, if they're serious sellers, they're more reasonable.
Right.
Yeah.
Yeah, I can say, for instance, we listed a property about a month ago, and we priced it well, meaning like we didn't price it less than where the pricing should be, but we didn't add that extra layer of, let's say, froth to the price that people being sellers would normally want, so they could have some wiggle room in negotiating. We priced it so right, and we got an asking price offer, and we sent out contracts in like less than a month. And this is for a property that's close to $4 million. And if you think about that, it's an interesting example of like, okay, so there's this lock-in effect, but some people are still making deals. There are deals happening.
Right.
Yeah.
With respect to the lock-in effect, you got to remember, we're about 5 years removed from 2019, where rates were at the bottom. Quite a few of the borrowers were at those 5 arms. Manhattan is kind of an arm market as much as the rest of the country is going to be a 30-year fixed market. And then you have some at the 7 ones, and you have some at the 10 ones. But there are a lot that went for the 5 one.
Yeah.
So they're basically out of time on that, and they're going to be paying the newer rates, at least temporarily. I think the longer term bias, if you kind of listen to what everyone's saying, is that there's an expectation that rates will come down over time. Variables there are obviously a multitude of variables that are affecting kind of where inflation is and stuff like that. So that's going to have an impact. But we've seen, we had a 50 basis point cut, a 25 cut. I think Powell spoke yesterday and said that they were easing off potentially, but sometimes it's just rhetoric. I think the general bias is that they want to see a lower interest rate environment to create greater affordability in the housing market. And the again, caveat is what's creating this condition is the lack of supply and the enhanced activity in contract signs. So buyers are going to see themselves, confronted with maybe multiple bids or having to pay a little bit more. And we may see the end result of improved pricing power, at least for well-finished apartments, right? That's the biggest challenge in our marketplace.
So Yuval, based on what we're discussing now with supply levels, where do you see supply going, and what are some considerations for sellers right now?
Right. No, I think that it's an important question to address. I think that supply has been running low compared to last year now for many, many months on end, and now you're adding all this new heightened contract activity, so that puts more pressure on supply. And then you have seasonality that's adding even more pressure on the negative side of supply, meaning that less supply will be into the marketplace because historically supply shrinks towards the end of December, as we discussed earlier, all the way until the first couple of days of January. So you're going to have a very tightened supply market, on top of already a tightened supply market.
So from what you're saying, everything I'm hearing sounds like if I'm a seller, I actually want to be in this market because I want to be in a market where I have a great apartment that I'm bringing to like a market that needs inventory. There's buyers out there, they want to make purchases, and there isn't much out there. So my apartment actually is going to get more action because there's not a lot of product. Would you say that's a fair statement?
Yeah, no, I think sometimes going against the grain when you kind of look at what's happening in the market and paying close attention to it, it could be an opportune time where you have the amount of buyers is probably going to trickle off a little bit, but supply is definitely going to come down further.
Right.
And we've seen heightened activity, so you know that there are buyers out in the market, and a buyer will come and see a property if they've had difficult time getting something because it's become more competitive or just lack of stuff that they're looking at.
Right.
There's maybe hasn't been a lot of appealing stuff for them to look at. They will jump in if the supply is there. I think it's a very interesting strategy to implement.
But it seems like pricing, though, because of the elevated mortgage rates, it's expensive, like to take financing now. So I don't know if it would be a good idea to overprice. I think you should price well, right? Would you say it's a fair statement?
Yeah, I think pricing is kind of one of those things that really it really depends on what it is that you're selling, right? If it's a phenomenal apartment, you're going to get a premium, right? If it needs improvement, then you have to be extremely sensitive to pricing, and I think we found that in the markets where apartments is kind of sitting around, the buyers are making their assessments. They're like, oh, it's expensive to carry at a higher interest rate, and then I have to carry another apartment while I'm improving this one, right? So that is part of the equation that buyers are making. So if you have an apartment that needs improvement, you have to be very sensitive to pricing.
No, we've seen that too. We've seen apartments that need renovations their prices are being affected much more dramatically than previously because the cost of renovations has gone up, and of course the cost of carrying the property has gone up, especially if you're financing. So the whole cost of buying the apartment and renovating has compounded to the point where they have to factor it into their negotiations. So Yuval, let's talk a little bit about the new development market. What's hot? What's selling? Give me some of your tips on where the market is. Like, what's trending?
Sure. The new development market is the more exciting part of the market. That's what everybody loves to talk about and loves to see what the developers are doing in building for, to attract the new buyers. And there are some amazing projects that are, achieving incredible pricing and absorbing the units at I think historic rates. One to just point out, or actually point out two that sold very quickly, the two projects that we've been selling at the Development Group. The Armani project that's looking at 65th
Oh, I love
and
the
Madison.
Armani project, yes.
That sold out in really rapid pace, well less than a year. And the average price point is very high. I know the asking prices were in the range of $20 million on average,
Wow.
give or take. And then that led into another great project, the Surrey, which also has a hotel that's also further uptown on 76th Street, just off of Madison. And that
What a
property,
location.
amazing location, and a hotel, and it's got other interesting
so it's like
things
hotel
going.
condo living.
You're right. There's a condo element, which is a smaller part, but then there's also a hotel. But that is also selling at incredible pricing. Last I saw was probably in a range of last asking was $5,000 a foot, and I think
Wow.
that they're pretty much almost fully absorbed already. So we see. It's great for the developers to build these. They're anticipating demand, but the demand is actually coming to the table and willing to pay quite significant premiums to get there.
Right, but so that's like the very upper reaches of the market, right? That's like the luxury of new development market.
Mm-hmm.
But I'm also seeing some interesting, which I haven't seen in a long time, some like new development products that are studios, 1 bedrooms, 2 bedrooms. Seems like they're clustered more in Midtown. I mean, how are you seeing that market?
Yes, the unit mix switches a little bit when you get further in Midtown, but we have some really good projects downtown. I just went to tour one for one of our colleagues on 2nd Avenue and 32nd Street. I think it was 609 2nd Avenue.
Nice.
That had a basketball court on the 4th floor. I walked into this, what I thought was an apartment. It's a full, not a full, but a solid half-court basketball court. And that's more studio 1, 2 bedroom type of apartments. Very different than the Surreys and the Armanis, which are much bigger apartments, but there seems to be something for everyone. And yeah, the traffic is pretty good there as well. And that is the feeder. Yeah, that is, we rely on new construction for supply. Otherwise, we're just stuck with resales, right?
Mm-hmm.
So
Sure. No, that's amazing. The amenities sound amazing. There's a project you were discussing that hasn't come to market yet on 5th Avenue. That seems like it's got some crazy ballroom. Like, what was that?
Yeah, well, that's one that
I know we can't talk about it yet officially, but
it's
can you
not,
just give us
yeah.
a little taste of like what that project is going to
Right,
have?
it just shows you some of these developers, they just kind of, a developer has to be extremely optimistic because they're kind of projecting what the market might respond to.
Yeah.
And they spend a lot of money to build it. And there was so many unbelievable things about the project. First of all, it's one of the tallest buildings in that area. There's unobstructed views to the south. I did go almost to the roof and saw the views. Got a little bit of vertigo there, but it was, the views were breathtaking. But yeah, the amenities are incredible. There's a big amenity space for a relatively small building that is, had about 60-foot ceilings, if I remember correctly.
Oh my God, 60
Wow.
foot
Just for the
ceilings.
residents, I think it was a ballroom for the residents on that floor. And that's something that one of our colleagues is bringing to market that to me is going to be one of the most exciting, new, interesting kind of buildings with parking and, radiant heat throughout, hydronic radiant heat, and very, very high ceilings. I visited one of the lower floor units that's not quite complete, but getting there. It was a duplex, a 2-bedroom duplex with over 30-foot ceilings.
Wow.
With amazing views. So there's that part of the market is always the most exciting part of the market, to see kind of what these developers are looking to produce and bring to the market and hope that people come in and buy. And so far, it looks like our track record's been good with these between Armani and Surrey. And then now we're going to move on to this one,
That's
amongst
amazing.
others. Yeah.
Yeah.
But that is the fun part of the market, right? To see all this new, interesting stuff, how they're looking to create inventory for the new consumer.
It feels like New York is just getting started when it comes to real estate. You know, like projects just keep on coming in and they keep on innovating with new ideas, new concepts. It just keeps on getting better and better.
Right, and in the luxury market, the pricing continues to be pushed. It's wild. I mean, the consumer's looking. I guess there's enough wealth out there that but the buyer's looking. If you provide what they're looking for, they're willing to pay the premium to get it.
Well, Yuval, thank you so much for
It's
such a
always
wonderful and stimulating conversation about the market. I feel so much more informed about what's happening out there, you know, hearing you speak, you know, and that's always the case because you're so amazing.
Thank you, everyone.
And Gabrielle, thank
Thank
you
you,
so
Gab.
much for
Thank
joining
you.
in on the conversation. I'd love to hear your take on the market.
Absolutely.
And wanted to thank you all for watching our market discussion. If you have any questions or comments, feel free to contact us. We'd be happy to answer them for you. And we look forward to seeing you on the next one. Thank you so much.
Bye, everyone.